If you work in bank finance or risk, you know what ICAAP season feels like. 3 months of late nights, multiple versions of the capital plan, all slightly different. A committee that wants numbers by Tuesday, but the inputs won't agree until Thursday. This model won't write your document for you, but it will get the numbers right first time. 20 quarters of projection, standardized and IRB-ready. Stress testing built in. Every figure traceable back to an input. Let me walk you through it. Every tab is open. No locked logic, no proprietary add-ins. Anyone on your capital team can see how a number was built, right back to the assumption that drove it. Which is exactly what you need when internal audit or the PRA wants to walk through the working. One dropdown runs the whole model. Mild, moderate, severe. The standard ICAAP stress severities. I flip it here. And every tab recalculates. RWAs, capital stack, buffers, all 3 Pillar 1 risks, in seconds. So instead of running one severity in a week, you run all 3 in a morning. This is where the discipline shows. Every assumption the model uses lives on this sheet. Nothing is hard-coded anywhere else. 3 scenario columns, 1 selected column, 1 formula. When an internal validator asks what drives the Pillar 1 calculation, you open this tab and the conversation is simple. 10 asset classes, parameterized separately. Mortgages, CRE, SME, corporate, retail unsecured, sovereigns, institutions, equity, op risk, market risk, CVA. Each one has its own PD, LGD, EAD, risk weight, because that's how the regulation actually calculates it. The RWA engine is where your capital number actually gets built. 10 asset classes, 20 quarters, full Basel approach. Each quarter, each class, exposure times risk weight, aggregated to total credit RWA. Market and op risk alongside. 20 quarters of projected RWAs, moving with your business plan. And the structure. Every quarter's EAD pulls from the prior quarter plus growth. No circular references. So when your CFO asks what happens if mortgage growth is half of plan, you change one number and the RWA projection walks through 40 quarters cleanly. This is where the capital stack lives. CET1, AT1, T2, all 3 tiers 20 quarters forward. CET1 starts from your opening position, rolls forward with retained profit, gets hit by deductions, goodwill, DTA, significant investments, and lands at the closing position each quarter. AT1 and T2 follow the same pattern. Every capital ratio is live, CET1, T1, total, against every minimum, Pillar 1, Pillar 2A, conservation buffer, counter-cyclical, systemic where relevant. If you sit close to MDA, the model tells you. Stress testing. 3 severities pre-calibrated, mild, moderate, severe. Each one applies a differentiated shock across PD, LGD, balance sheet growth, and operating P&L. What you get is a fully reconciled capital walk. Start at opening CET1, subtract stressed losses, subtract elevated provisions, adjust for RWA migration, land at stressed closing. Exactly what the PRA asks for in the ICAAP template. And because it's integrated with the base case, you see the gap. Where your plan is today, where it lands under severe stress, and what management action the shortfall would require. The capital plan. A full 5-year forward projection, opening CET1, plus organic generation, minus dividends, plus or minus discretionary instrument changes, equals closing. Each year, tied through to the buffer calculation, which is where the MDA check lives. If your projected CET1 ratio drops below the combined buffer requirement, the model flags it. That's the cell your executive committee wants to see before the plan gets signed off. The analytics. Two-way sensitivity tables. PD multiplier against RWA growth. Capital generation against dividend payout. The answers your risk committee will ask for live in the meeting, alongside the risk appetite framework. Every limit the board has set with actual against threshold. Credit concentration. Interest rate risk in the banking book. A full repricing ladder with NII sensitivity. Everything your ICAAP submission needs to demonstrate. Not in a separate file, built into this one. And the integrity layer. Automated checks on every major calculation. Capital stack integrity, Pillar 1 at exactly 8% of RWA. No negative closing CET1. Ratios in the right order. Stress losses consistent with the balance sheet walk. If any check fails, the master cell goes red. If it's green, every number ties. Honestly, if your team pulls the ICAAP together in a folder of spreadsheets that talk to each other via VLOOKUP, this is what you want instead. One file, 10 asset classes, 20 quarters, 3 severities, audit ready. It's on sfsmodels.com under ICAAP. Thanks for watching.